In this video, we will explore tracking futures and options data. We are going to look at a comprehensive guide to understanding the various indicators that help us follow the futures and options market. In the past, before internet trading became so popular, people relied on daily newspapers as their main source for finding out the prices in both the spot and derivatives markets. Today, things are much faster and more convenient. You can now track market prices on a real-time basis by visiting the official websites of the stock exchanges or by using the online trading platforms provided by various brokers. When you look at market data, several key details help you identify what you are tracking. First is the date, which tells you the specific trade date for the information you are viewing. Then there is the symbol, which is a short name for the underlying index or stock, such as Nifty or ACC. We also see the instrument type, which acts as a descriptor for the different contracts available, like futures for stocks or options for an index. Finally, the expiry date is the specific day when the contract will officially end. Next, we look at the option type and the strike price. The option type tells you exactly what kind of contract you are dealing with, such as a call European or a put European. You might see these written as CE or PE. We also track the strike price, which is the specific price set for the contract. You can visualize this like a price ladder showing various price levels like 18,100 or 18,150, which traders use to make their decisions. Another important indicator is the corporate action level. This acts as a flag that changes whenever a company has a major event, such as a symbol change or the announcement of a dividend. Along with this, we monitor the opening price. This is simply the price at which a specific contract started trading at the beginning of the day. To understand how prices move during the day, we look at the high, low and closing prices. The high price represents the highest point the contract reached during the day, while the low price shows the lowest point it touched. If you are looking at real-time data, these reflect the highest and lowest prices recorded up until that very moment. The closing price is the final price of the contract when the trading day ends. One of the most frequently watched numbers is the last traded price, often called LTP. This tells us the price of the very last contract that was traded. For example, you might see a value on a digital ticker like 18,450.50. In a live market, this number reflects the price of the most recent trade executed, giving you the most up-to-date value of the contract. Now, let us discuss open interest, which helps us understand the total number of active positions in the market. For futures, we calculate this by taking the open positions and multiplying them by the last available closing price. For options, we multiply the open positions by something called the notional value. This notional value is found by multiplying the open positions in that option contract by the last closing price of the underlying asset. To gauge the level of activity in the market, we track three main figures. The total traded quantity tells us the number of contracts that were bought and sold during the day. The total traded value shows the total amount of money involved in those transactions. Finally, the number of trades tells us how many individual trades were actually executed on that instrument. We can also identify trends to see which way the market is moving. A positive trend points us toward the top gainers, which are the futures showing the best performance. Conversely, a negative trend highlights the top losers in the futures market. Watching these trends helps you see where the most growth or decline is happening. We also pay close attention to changes in interest through OI gainers and losers. Futures OI gainers are those contracts that have seen the highest percentage increase in their open interest for the day. On the other side, Futures OI losers are those that have seen the highest percentage decrease. These movements help us understand if new positions are being created or if existing ones are being closed. In the options market, we look for the most active contracts. Active calls are the call options that have the highest trading volumes on a particular day. Similarly, active puts are the put options with the highest trading volumes. Since high volume often indicates high interest from traders, these are key areas to watch. Finally, we use the put call ratio or PCR as a sentiment indicator. This ratio compares the trading volume of put options to the volume of call options. It can be calculated using either the trading volumes or the open interest. This single number helps us understand the general mood of the market and whether traders are feeling more cautious or more optimistic.